Heidi ho, everyone, and welcome aboard. Thanks for joining me for today's Trading Buddies. And I wish I could see what was going on here. It'd be very, very nice. I've forgotten how to run this show, apparently. There we go. I think I can see what's going on. G'day, Lewis. G'day, Teen SW. Nice to have you on board. And those of you joining in YouTube, Facebook, and all the rest of those social media things. Whoa, hang on, a bit of feedback going on. There we go. Look, I hope you had a great weekend. I hope you had a great couple of weeks whilst we were in recess. Of course, Ash was back last week. I was not. I was travelling still around the globe and managed to catch a lurgy whilst I was away. So if my voice sounds a little bit ridiculous, then my apologies for that. But SH1T happiness. Anyway, let's get stuck in, shall we? And back to where we left off, or where I left off about 3 weeks ago. Let me show you what I'm up for this week. There we go. That is gold. We might talk about gold a little bit later, but for now, we will talk about the currency indexes. If I can actually find them. There we go. We'll start with the dollar, and I must confess I haven't really looked too much at charts since I got back, but the charts look very interesting from what I have seen. What I'm not too sure about is what the market sentiment is, because I'll have to take a little bit of time to catch up with that. Ash, of course, will be my greatest asset when that needs to be done, and he will be here very, very shortly, of course. Looking at the dollar, look, I'm a little bit not convinced as to where this is going next, but I've got the sneaking suspicion that it's going to come back up. Reason for that is that we're at this strong support level. It's been supported in the past. We've broken, however, the resistance area, suggesting that this is a false break of resistance. Not so sure about that. Last week we saw this attempt to play to propagate, if you like, an ABC break retest. Didn't happen. In fact, it fell well short of that. I suppose you could have drawn a line through the non-farm payroll and thought that not such a good number, but it was a better number than the last one. It would need to be, however, because that was a shocker. I think the wages went up and the unemployment rate went up also. So a bit of a mixed bag there for non-farm payroll on Friday. And I think we're seeing that in that candle from last week. So tried to go low, didn't. Are we now seeing a break back above the support trade line and this support area here and on with the job? As I said, I'm not sure where that finishes up, so could go either way. I'm a little bit on the fence. Lewis, with the US presidential election coming up in 2 months, dollar should back up. Yeah, look, not convinced on that either, to be honest. Anything could happen there, in my humble opinion. Having spent the last 2 weeks in North America, some very interesting conversations with some interesting people. They're scared, absolutely scared as to what may transpire. I think I kind of get that as well. So I'm not sure if the dollar has got strength on the back of that, Lewis, but who knows? The Aussie looks to be in a bit of bother, and the last 2 weeks evidence of that. Trying to see a support level through here. There is a minimal support level, so maybe a little bit of a bounce, but I think I've got to be bearish the Aussie at the moment. Canadian dollar, CAD last week, the Bank of Canada, I think, dropped interest rates again for the 3rd time, if I'm not mistaken, in a row. And on the back of that, we're seeing a weaker Canadian dollar. It does look destined to retest the backside of this trade line, which of course is at a strong support level as well. So don't think I'm a fan of the CAD this week. British pound. Yeah, look, got claims here, I would have thought. Looks to be in a nice uptrend and has broken the most significant resistance level I can see on the chart. and maybe it hasn't retested that from a trend line point of view, but I think it certainly has from a horizontal level point of view. So I'm a little bit bullish the pound, I'd have to say, on that evidence. Maybe it retests the trade line, but I'm a buyer. In fact, I have got an order set pound versus the dollar, and I think that's the best of the dollar pairs this week is pound versus the dollar. I'll give you those levels shortly. Swiss franc. Yeah, look, we've been following this for a long, long time and suggested, of course, once it came back in this range, it would head for the top. That certainly has played out in the last few weeks after we got that, pardon me, retracement on with the job. Little retracement there again 2 weeks ago. Failed to really close above that, which is interesting. And of course, you can see this level over here is halting the progress of the Swissy. So we are at resistance on the Swissy. Perhaps we are seeing maybe a little bit more pullback. Not sure it can go through this level quickly. So I'm a little bit on the fence with the Swissy as well, but probably favouring a little bit of downside. Not too much, but maybe coming off that high. The Kiwi. Now, the Kiwi and the pound are very, very interesting. I think this is actually better than the pound, to be honest. And the reason for that is it's retested both the horizontal level and the trade line. So backside of the trade line. I'm a little bit bullish the Kiwi. I don't know if fundamentally or indeed from a market sentiment point of view that's wise. I'd have to catch up with that. But to my mind, this has retested both the horizontal level and the trade line. So I'm looking for a bounce here on the Kiwi, and I am a little bit bullish that. So pound and Kiwi, I'm a bit bullish. The yen, still going strong. However, it is at a, I'd have to say, recent resistance level, not so much a historic one, but you've probably got to still think there's some more left in the yen. I just don't like to trade into that area. So I think the yen pairs, whilst they do look interesting, and there's a lot of game changer bars on the yen pairs, which suggests that the yen will continue to be strong. Maybe a little bit of a trap in that, and I'll explain that a little bit further very, very shortly. The euro is probably the one that I'm least in favour of, and the reason for that is it's failed to produce the ABC, the typical ABC, and last week's bar, primarily, I suppose, due to news, but in the event of there being not a great influence of the news, and I'm not up to speed with it, to be honest. This looks to me like a rejection of that level for a second time, and I do see the backside of this trade line at a fairly reasonable support level as well, for a resistance there. So I think the euro is out of favour for me this week, and that leaves us with bullish pound, bullish Kiwi. Dollar, I'm not sure. Probably bearish the rest, with the exception of the yen. And I think the weakest from my technical point of view would be the euro. Bring that all together, I do have two orders in the market. One is pound versus the Kiwi. As I said, both I'm bullish both, but I think the Kiwi's got better prospects than the pound. And I do have a strong signal here that suggests to me if this does weaken, pound Kiwi, it'll come through that level and head towards support. So looks like a false break of resistance to me. Level, if you wanted to follow that, is entry at 2.0994, and stop loss, I can't add 305 pips to that at this point, so I better check the level. 2.1297. Would that be right? 2.1299, maybe 2.13. Should tell me, shouldn't it? 2.1299. There it is. That's the stop loss. First take profit is 294 pips at 2.0700. So that's just a simple. If it does break here, it's going to find support and we'll get profit in the bank before support. If it does reverse, there's plenty of room down here to collect some money. So maybe we've got an offset M topping pattern there. Maybe we have. We'll see. But like I said, the pound, I'm bullish as well. I think the Kiwis just got a little bit over it, and that kind of works for that position. Pound versus the dollar, on the other hand, I am bullish, as I said, and I'm going to buy the pound versus the dollar if it goes back above here. So simple A, B, C trade. And I like the fact that it's broken resistance here. I like the fact that it's retested the trade line, well, top of the channel, if you like, which coincides with that horizontal level. So I think if price goes back to here, it's going to find resistance up here somewhere. Entry level for that one, 1.3269. The stop loss is 174 pips below that at 1.3095. And we've got better than 1-to-1 for our first take profit, which will be at 1.3500. So pound long, pound short against two different currencies, of course. The indexes we've been through, lots of game changer bars. They were, as I said, primarily against the yen. And let's start with that, and I'll give you the reason that I was really keen to take one of these. Really keen to take one of these because it fits my criteria, which of course is reversal up here, big sell-off, retracement, game changer bar, automatic sell. If there was no support level here, and the bigger reason is this has to agree with the big picture, and the big picture is anything but bearish. Of course, we all know the yen's been so weak for so long. So that doesn't fit. Great candle, I've got to say. Well, when I say great candle, it's a great signal candle. It's not a great candle to trade because of that support level and because it doesn't agree with the big boss. So I find it very, very difficult with those yen pairs to trade short this week, despite the fact we have had a retracement and we have had a big, strong selling bar last week. That's Swiss yen, that's euro yen. I think euro yen's probably the best of them because I am bearish to euro, of course. So if you wanted to trade a game changer bar, I think that's the best one, euro versus the yen. They're all very, very similar. Pound versus the yen's the same, but I'm bullish the pound, so I don't want to trade that one. Kiwi versus the pound, I'm always also bullish the Kiwi, so I don't want to trade that one. But there is plenty of room if you fancy them, no question. And the final one, dollar yen, very, very similar. Not the same, because we did have a rally, but we've also had another sell-off before the game changer bar, and it is at support as well. So I've changed my mind on those pairs. They look very, very good when I opened the chart this morning, thinking that game changer bars were the flavor of the month or the flavor of the week. But I've changed my mind on those and giving you those two: pound dollar long, pound Kiwi short. Hello, my good friend and trading buddy Ash. How are you, mate?
Yeah, not bad, buddy. Not bad. How was the trip?
Up to shit. I mean, not so bad.
um,
You know, I'm a
so
bad traveler. I don't like traveling.
no,
Much
I know what
rather
you
be
mean,
home.
mate. I know what you mean. Good morning, Lewis. Yeah, I didn't. Well, I mean, a good rest. We're doing IFP this weekend, so Lewis and I have been
Oh,
working
yeah.
all weekend. And yeah, it's hard to get rested really because I'm up at midnight and then asleep at 11 a.m. So my body clock's kind of, just kind of readjusting. It usually hits me around about Thursday, so I'll be all right today. Um, Interesting looking markets, I have to say, mate. It's I agree with you about the yen, and the yen's a really interesting one because of the COT data. The COT data
Okay.
actually points to downside yen. Well, it doesn't point to downside yen, but it points to the bigger kind of players starting to come in and say the risk is now to the downside, which is effectively what
Interesting.
they're. Yeah, I mean they're effectively saying at these particular price levels, the markets move far enough for it to be dangerous to trade long at this particular point, in their opinion, and what they're doing.
Mm.
Now, of course, they're big players, so that means that they're looking for long positions that survive and exist for a long period of time. So, not directly correlated to what we might do on a short-term time frame, but there is some suggestion that the yen is just a little bit less attractive. Well, actually, a lot less attractive at these particular price points, and we can see why. You know, you're looking at a dollar yen there, and you can see why it's less attractive. Not only do we sit on support, but we've also had a pretty expansive move to the downside on the dollar yen, so upside on the yen. So yen's less attractive. Um, I think your thesis, do you know, the pound is an interesting one because you know you're talking about being bullish the pound, and actually fundamentals from the UK are one of the stronger fundamental pictures that we're sort of seeing across the board. But what isn't stronger is the inflation data, because the inflation, we've hit 2%. You know, we popped up to 2.2% last time out, but we've hit 2%. And while central banks are on the move, the UK probably has now a little bit more room to reduce interest rates again, and that's going to affect the price of the currency. So the fundamentals might not be the driver for for the pound in the near term. In the longer term,
would the BOE not be happy with the 2%? Would they?
Yeah.
Is the economy need more stimulus than that, or?
Well, I don't know if it needs more stimulus, but the interest rates are certain sectors of the economy do need more stimulus, like the housing sector, as an example. Housing, house builders are doing okay, but the housing market isn't doing particularly well. There's a little bit of a logjam where buyers want to start buying, but they're just less incentivized because of the price of a mortgage. So that's one area that you know the BOE will look at, and we've got a Bank of England meeting next week. And actually, we've got is it next week or the week after? So on the 18th or 19th of this month, we've got 19th of this month, we've got BOE meeting. So in a couple of weeks' time. The ECB go this week, so the ECB and the euro may well be under pressure because the ECB and the euro fundamentals are pretty disgusting. You know, if you were to compare the two of them, you would definitely be leaning on the side of the pound, you know, the UK over the eurozone. And I'm looking to say no, there's not, unfortunately, and I'll show you why. There's no trade call at this particular stage. Let me just put my charts on.
Oh, Lewis is against me. Pound dollar short. Okay, cool.
Yeah, interesting to get Lewis's thoughts actually on gold and silver, because gold's another really interesting one because of the you know the potential strength against what you know the US economy actually isn't doing great. You know, we have to sort of call it as it is. The COT data does not back that up. Seasonal data doesn't necessarily back it up, but the actual you know the numbers from the US aren't particularly good. So you know we're going to get an interest rate cut this month from the Fed by all accounts. The question really is how much of an interest rate cut. Will they go 25 basis points or will they go 50? They could go 50 because of the historically historical elevated prices. When I say near, I mean over the last 15 years. But we might just get a 25. They might just dip their toe in and just cut by 25% and 0.25%. So I don't know whether that might continue to just add some boost behind the dollar. But if we look at this anyway, this is the euro pound, and I would like a short on this one. But look where we are. I mean, if we sort of like look at this on the daily, we've had a little climb to the upside, massive gap between the previous support zone to where we are now. So there's lots of room to the upside, actually more room to the upside resistance. Even if you look at this over here, more room to the upside resistance even there than there is to downside support. So the charts aren't all that attractive, except for there is a little horizontal level here, you know, which we're pretty much on top of. You know, we can see that. So there's a possible point here where we could see just a bit more downside. That would be the first thing. But then when you look at the 4 hourly, big move to the downside, then a massive move to the upside. And even though it's holding here, this is really a takeout of these kind of, difficult resistance points. So there's no signal at this point that this is weakening. For me, for this to weaken, I can't read it off the 4 hour, because by the time I read it off the 4 hour, it will probably I'll probably ignore this here just for now and look at something like that maybe, or possibly something like this. It's a difficult trend line to draw actually, but that one looks pretty good. So I'd probably look at something like that, so maybe breaking down this particular zone, that would start to become a lot more interesting. Break to the downside, then a retest. I would look at that off the 4 hour. Off the hourly, it gives us the same information, because it's going to be breaking these lows, which is pretty much, depending on when it happens, it's going to be very close to the trend line break. So until I see that, there's no trade. The fundamentals kind of it's too messy. So when I read fundamentals and cotton seasonals, what I'm trying to say to myself is, or what I'm trying to ascertain to myself is the market wrong about the direction of a currency pair? And if I believe it is, then I'm waiting, because the setup right now, the signals right now point to more upside than downside. They don't point to a huge upside at this point, but they point more to upside than downside. We're getting, a break of these areas here, big bullish area, nice hold. That suggests further upside. So the charts suggest something different to what the fundamental reading from what the data I collect say to me. So that says to me that the market's wrong, but I can't trade it until at least part of the market, which gives me just a little bit of a reversal in the area, starts to agree with what I'm thinking. So so right now, the charts would keep me out of the trade and probably keep me out of trouble as well. So so there's nothing there for me. I quite like the pound CAD as well. And I was looking for a pound CAD setup because it was looking relatively good. Pound against the dollar, I also quite like for some upside, but the better way probably to play it is the pound CAD. Canadian fundamentals are very similar to the US fundamentals right now. But how do you trade this one long? This is just at this point it's okay. So we got another. We've got another couple of hours. In a couple of hours, if this is closed at the same point or above, that keeps the trade on the table. It doesn't give me a setter, but it keeps the trade long on the table. If it's closing down here, it takes it off the table, and then I'm waiting for a different signal, because it looks okay. There's support down here. There's support here. There's probably a little support line here, somewhere. It's a little bit scruffy, but there's a little bit of support down there as well. But this is going to be pretty pivotal. What I'd really like is probably to see us close above here, at some point test and continue to close above here. And then I can go down to my hourly charts and just start to say, well, okay, there's probably resistance there that I'd need to break through. And if I do, then I'll be going long. But again, at this point, this just isn't attractive either. So as I open up the charts this morning, I don't really have a trade. I have ideas of what might happen and what I'd like to see happen, but they're not currently manifesting. Gold, I'm interested in, Lewis's thoughts on gold, because he's probably a more proficient gold trader than certainly I am, and he seems to be on top of this stuff. This looks heavy. The actual charts is starting to look heavy. There's a bit of indecision here, maybe a bit of profit taking, but it's not absolutely clear. But we have seen a big run to the upside in gold. We're seeing all green bars, but with tails. That there's obviously sort of a bit of a struggle in and around this area, and this would be a much more comfortable long if it had tested in and around this area at 2,000, 2,100, something like that. If it had tested that point already, then I'd be a bit more bullish on gold. But at these points, the chart looks to me like there is room to the downside and profit taking could come into play. Then the question comes in, does the fundamental picture agree with that? And it kind of doesn't really, because there's still concern in the world. So if you're using gold as a hedge against your portfolio, then you probably want to keep it. The caveat to that is that if you want to rebalance some money, then you're probably going to take profit where there is some, and try and keep your other trades in the Nasdaq and the S&P and the indexes open. So gold might actually get some profit taking, even though the fundamentals don't suggest that there should be profit taking. There might be that just to rebalance some portfolio. So, gold's a bit of a tricky one. Silver, I think, is a more attractive.
A bit hard to think from where we are now that 2000 is going to get a revisit, though.
Yeah, agreed.
It is hard to think that way.
Yeah,
they're not saying for 1 second it can't happen, but
no,
right now, given the state of the world, it is difficult to imagine.
Yeah, I mean, you got Iran now backing up Russia and providing them with missiles. You got the UK backing up Ukraine along with the United States. So we are in a world war of some description, as kind of different regions of the world kind of all I guess through the back door get involved in the conflict. So it's probably not a world war as we imagine, but it is going on. The globe is now getting drawn in. So you wouldn't really kind of want to speculate and start getting rid of a safe asset like gold. So you're right, mate. I suppose with this kind of stuff, the way I always look at it is that this number will probably be seen at some point. Now, as you quite rightly say, now might not be the point. What we might be looking at is a year, even, as things kind of like level out or people get used to the new narrative or whatever it is, or it escalates and it flies to the upside. But then when things calm down, then it could take a long time, and then all of a sudden the area is tested and everybody just floods out of gold. That kind of thing can happen too, particularly when you see such aggressive buying. There's often an aggressive sell point as well after an aggressive buy at some point, but we don't know when that'll be. Same's happened with the Nasdaq. Same's happened with equities right across the board. They don't tend to just sort of travel up without giving people at least one more opportunity. They can, and it has happened, but it's not regular. Bitcoin's a really good example of it, where you see these exponential moves to the upside, and then years later it just tanks straight back to where it came from. So the same could happen with gold, and considering the type of asset it is, I think that the likelihood increases, but it might not be now. So difficult one. But silver's the interesting one, I think, of the two precious metals, and the reason for that is that silver has started to show a little bit more, I think, concrete downside. This is a nice example of what I'm talking about. Look at that point there. It hadn't retested, and then years later, because we're looking at monthly charts, years later it comes down, tests that area, it uses it, and it jettisons. This point here, that might be close enough actually, but it does look like we're going to get at least another test of the lows, or maybe we also do come and test where it's come from, and then you add the fact in that silver's an industrial metal, and we've got this kind of this odd global recession going on. And I call it odd because some of the metrics suggest weakness, while others are suggesting that there's something robust also holding things up. I think we are at a very dangerous point right now for the global economy, where PMIs in the US are starting to weaken. The jobs market is showing good data than bad data. So it's a little bit kind of unclear. And you've got high interest rates, if you look at the 15-year historical average. So I think the and conflict in the world, which could continue to boost, continue to hold inflation where it is. So I think we're in a tricky position here, where central banks probably would love to lower interest rates to kind of like get some parts of the economy that are faltering moving again. But can they? With the inflation picture the way it is, with the global concerns, the way they are, and inflation could pick right back up again. Can they do that? Not so sure.
Here in Australia, they can't, and they keep saying they can't. They're the only ones that, still haven't taken hikes off the table yet.
Yeah, no, I don't think you can. I don't think you can. I suppose just to close out, WTI is another pretty explicit looking chart, which we're right back to the lows that we saw back in 2021 or the start of 2022. to where we're now at $68 again a barrel. That was almost completely off the table when we kind of started to think about the conflicts and the fact that we were going to get a problem with the oil situation. This is really the start of the Ukraine conflict, where we saw oil just rocket to the upside, get to near $135 a barrel. Now we're half that, which is just astonishing when you kind of think of where we've come from in the next 2 years. For an asset to halve in value, if you'd doubled your money, which is the same on the opposite side, in 2 years, you'd be overjoyed. So to consider that now we've got a halving of value of a commodity like oil.
Yes, like oil. Yes, if it was a penny stock, different story. But
yeah,
it ain't.
Yeah, and this is pretty explicit. When you look at oil, it really does tell us quite a lot about the global economy. So this is really suggesting that there's a slowdown going on, and people aren't in the need for oil. So if they're not in the need for oil, then that puts pressure on everything, on indexes and everything else, with a weakening dollar. That's sort of like the other aspect to it. If you kind of look at,
doesn't that open a can of worms? Are we now looking at the petrodollar becoming less and less relevant?
Quite possibly.
Is this now a reflection of that?
Yeah,
dollar
quite
falling,
possibly.
oil falling. Interesting.
Yeah, oil falling, and look at this is the dollar.
Yep.
I mean, interestingly, the dollar kind of got a spike as well, during that conflict as well. But this is where we are with the dollar. So oil is even weaker than the dollar is the point here.
Although when you look at the oil chart and when you look at that chart, if you were just looking at that period of time, you'd say both oil and the dollar are at fair price.
Yeah, I mean, this is the rally sort of like
they're at the mean. They're exactly at the mean price.
But this is so that the rally in the dollar. This is the interesting thing here. Look at the rally in the dollar. This is when the dollar rallied, and then all of a sudden it fell here. So if I put this at a different color, let's put it at midnight blue. I'll just change the
I was just about to burst into a song then. I saw an email came through
again.
Yep.
Really?
From January 2023. There was a complaint from YouTube.
I don't think they're complaining about the fact that you're singing the songs. I think it's the way they're sung.
Perhaps. It was from.
Like, can you stop that tuneless guy singing?
I think it was from Warner Music. Complaining.
Oh my God. How are they finding this stuff?
So it must have sounded something like the original.
Yeah. Do you know what, mate? If you look on YouTube, you'll probably see that we got about 3 people watching, and one of those is Warner Music. Yeah. So this is interesting. Like, we got this is the run up with the dollar, and actually I'll put in sort of like the low point. So this is the whole run with the dollar. Let me change the dollar upside to a white line and the end to the thing, and then this is the downside with the dollar. So then we start to kind of sink. Now look at oil. Oil kind of gets itself going at the same time. Now this was the end of the dollar run.
Yeah.
So the dollar was still running to the upside when oil was starting to really sort of come down, and then we start to see the dollar come down, and we see just oil just start like stabilize just a little bit in this area. But they are now in tandem. If you were comparing sort of like what's going on with the dollar and what's going on with oil, this is what this is suggesting is that there is global weakness, and from oil that we're getting from oil, and the Fed are going to react. That's what that is kind of suggesting, that we're going to get a cut in interest rates to promote some upside. Now that would also suggest that at some point there will be a disconnect then with the dollar and oil, because that would suggest that the dollar continues to fall to the downside while oil then starts to get a pickup because they're managing to boost global demand because the economy is starting to pick up again. So this particular phase where we are, I think, is pretty pretty pivotal and quite interesting when you consider that this is a strong support level down here. We're not there yet, but we're close enough at a strong support level. Then you bring in the dollar index, same deal. It's a really strong support line here. There's a one sort of like trend line along there, but if we're just considering the horizontal lines, we're pretty much sort of seeing the same thing with the dollar as what we're seeing with oil. So so what happens next? That's the big question. You know, what's going to win out here? Right now we're getting a little bit more of a boost to the upside with the dollar, but you know, that might not last long if the Fed have to step in significantly. Janet Yellen says there are no red warning signs really from the economy, but I don't know really what she's reading.
Really? I want what she's on.
Yeah, I don't know, mate. I mean, you know, obviously they a lot of the stuff that central bankers and Treasury members talk about is to calm concern, because if you calm concern, that can improve the consumer's sentiment, and they go out and spend, and it's almost like becomes a tool to kind of like boost the economy without actually doing anything, just by saying stuff and making people feel comfortable. Yeah, you're right, Lewis. China will play,
AKA lying. Yes.
Yeah. I mean,
did you look at the unemployment rate on Friday?
Well, do you know, this is it's another interesting metric, mate, because if you sort of like, if you look at the employment picture from the United States, and I'm just going to bring that up because that's a relevant kind of
6.4 or something.
Let's bring it up. Let's have a look. So this is our economic calendar. So we're going to have a look at last week. And it's reported. So we're just focused purely on the employment metrics. So ISM employment in August at 46, 50 is growth, 46 is contraction. So anything under 50 is contraction. Contraction in manufacturing employment. And then we come down to here, continuing jobless claims, contraction.
Yeah.
You know, non-farm employment change, there's contraction. So basically you've got two things that don't agree. Employment contraction, claims contraction. So they don't agree. Initial jobless claims, contraction, they don't agree. Unit costs per labor, way down. So there's some and again there's some deflation there, deflationary numbers there, which is a good sign, really.
Well, if you look at that unit labor, it's quarter on quarter. Okay, that's a bit different because the monthly report wages went up. Yeah, but over the quarter, what we're seeing is that there's less pressure. But that sort of like suggests that the labor market is under pressure. If you're not having to pay people quite as much, then you've got a lack of employment problem. ISM non-manufacturing employment pretty stable, 50.2. So this is what I'm saying about the numbers. You know, that the headlines are really that the US jobs market is imploding, but that's not what every single metric is saying. Yeah. Even look at this is a good one to look at, the U6 and the unemployment rate. Now, if you look at this unemployment rate, 4.2. Now, if we have a look at this as a chart, that looks okay. 4.2 is not that's not in danger zone. I read a different number. I read 6.2.
Well, that might have been the U6, but even the U6 is at now the U6 is at 7.3, which is climbing. Actually, 7.9 that says, which is climbing, to be fair. But when you look at historical numbers, this is nearer the lower end than the higher end.
Yeah.
You know, so the labour market might be under pressure, you know, as seen by things like non-farm payrolls, participation rate for 62.7%. I mean, you know, it's pretty good numbers. Again, you know, it's not quite as high, but it's pretty balanced. I mean, it's been climbing, you know, so we're okay on the participation rate as well. So the numbers aren't the numbers don't appear to be terminal. They just appear to be a bit under pressure. You know, so I think it's a tricky market to read if you're looking for extremes. I think we're not looking for extremes, and we're not in extreme zone right now. It's going to take something else to put us at an extreme. So thinking that we're going to just sell the dollar is probably not 100% wise, except for if you look at the actual economic numbers. And you go back to this this manufacturing number here, non-manufacturing. So let's have a look at the manufacturing number. Where was it? Here we go. ISM manufacturing PMI is at 47.2. You know, this is a concern. If we sort of like thinking about 50, this is at the lower band of growth. Obviously, you get
It does look stable there, doesn't it? Really.
It's stable, mate, but that's anemic. You know, that's
yes, it's not stable in a good spot.
No, it's not, because it's stable under 50. So it's stable in contraction area rather than you know, it's not doing this. So we're not in boom time, which is fine, and it's not doing this. So we're not in kind of like massive contractive period, but it's just not there's no growth at all. It's just gone absolutely benign. It's completely flat, which is why the Fed have got this juggling act to go. Now, do we lower by 50 basis points to give this economy a proper boost and get it going again, or do we make sure that we're juggling the inflation picture you know, correctly? It's a difficult one, because if you look at the inflation numbers, they're okay, they're dropping, and we just seen from the labour market that the unit labour market costs are suggesting that the labour market is not putting pressure on inflation. So they could go a lot lower, and this is why the market doesn't really know which way it's going. The chances are 0.25 has been priced in. So yeah. Now people are thinking, do we price in a 0.5% cut? And sell the dollar off, and right now they're not selling the dollar off. You know, if you're kind of like considering gold, not substantially. You know, we're actually seeing a boost in the euro dollar. Euro dollar is coming down. The dollar is stable against the yen. It's doing okay against gold over the last few days. You know, so we saw some pretty bleak numbers, and the dollar spiked and then, you know, dipped and then spiked again. So it's you know, a little bit tricky. They don't want to give it up. That suggests to me that we might be wise to stay away from the dollar, as not as a pair, not putting it in the pair, but maybe focusing on the other side of the pair. If we're going to be trading, if the dollar's in the pair, like euro dollar, fine. Focus on the euro rather than the dollar, because the dollar is just giving us you know, these mixed signals.
Yep, cool. Got it. So
incidentally, mate, the Kiwi is probably going to be more affected by the global contraction than anything else. And that's why the Kiwi fundamentals are very, very difficult to give too much support to, in my opinion.
Yeah, look, no problem. Just looks technically like a bit of a bounce this week for me. But you know, not suggesting it's going to be the strongest currency for a week or anything like that. But I see a little bit of a bounce off that support, which was former resistance. We will see.
Yeah.
Mate, George is with us, believe it or not. Cool. Haven't seen him for a long, long time. He has exceeded folks to give us a recording each and every week, because his time pressure on a Monday is not good. But it's great to have him on board as usual, and he's going to teach us all about how his new method, well, it's not so much new, he's just adjusted a little bit, I think, of trading price action on the 5-minute charts is concerned. And I think he starts, of course, like we all do pretty much, with the daily. Now, if I can actually do this, I will give you the recording. Let me see if I can do that with the sound. We'll go with that. We'll go with there and we'll press play. Let me know if it works.
Oh, nice work, mate.
Good day, traders. It's good to be
I've got the circle of death.
Yeah, worked momentarily.
It started.
back on Trading Buddies as a guest. Thanks to Jeff and Ash for having me back. Now,
My goodness. Three seconds every now and then.
Yeah, yeah. If you got nothing to do for the rest of the day, guys, enjoy the video.
That's pretty sad. Let's see if it'll buffer in a second. We won't stick with this too long, guys. I can promise you.
4 markets that I'm going to look at. Trying to do.
No, it's not going to work. That could be because I've got so much open here on my computer. One more time.
Do you want me to try?
Yeah, sure.
Okay. Did you download it or did you just take it straight from YouTube?
Straight from Skype.
Okay.
This went to YouTube, yes.
Okay, so I need power here. I need power there.
Don't forget to share the sound.
Oh, well done, mate. Yeah. Actually, I'm going to put that over there instead.
Apologies, guys, for this little pause.
Yeah, we've never been tidy ones, have we? Here we go.
Good day, traders. It's good to be back on Trading Buddies as a guest. Thanks to Jeff and Ash for
how we doing?
Yeah, good.
Cool.
I have 4 markets that I'm going to look at. Trying to do it on a consistent basis, purely on price action. Now, the reason I'm only using 4 markets, I mean, as you know, we have dozens of markets to look at, and I won't be able to cover all of them, even given sufficient time. But I think the principles that I'm going to share in looking at these 4 markets, hopefully on a consistent basis, are easily adaptable to any other market that you are trading. So there's not much science to it. I chose 1 commodity, 1 index, and 1 currency. Okay, let's change that, George. 2 commodities, Brent and silver, and then the DAX 30 and also the Euro Yen. So it really doesn't matter. And I think you probably have heard me say this quite a few times. If we removed these labels at the bottom, and if we also removed the time scales at the top and the pricing scale, there is absolutely no ways that anyone could guess correctly which market it is. And from a price action perspective, what that means is whatever is applicable to this charts that we're looking at, you can apply to any chart, any market, any time frame, and be able to trade effectively, which means make profits out of price action trading. Now, there are some terms that I will probably mention. There will be terms that I'll mention going along the way, and we'll not have enough time to explain them. But if you go on to the videos of all the shows that the traders do, you will find price action profits. That's the new label of my show. We started last week. So the very first price action profits talks about terminology. I just focus out on some of the key terminology that I use. And every week when I release price action profits over the weekend, just focus on an actual trade taken. The terminology has already been referred to. So please go to that video, the first one in price action profit series, and then you can find all the terminology that I am talking about. So having a look at German 30, I mean, if you were trading the indexes last week, man, that collapse, that crash that happened on Friday was absolutely amazing. You would have been able, if you were in the market for a specific time when that crash was taking place, execute a few trades. You might have made a lot of money, a little bit of money, broken even, but opportunities were there to trade something and then see what you get out of it. I took a crude oil trade, and that went, I enjoyed that thoroughly. Actually, my price action profits video for this week, which is available this Sunday, the 8th, is based on that particular trade. So the crash on Friday. Just look here. What does it mean for DAX 30? Well, there's these two extremes I think are important to have a look at. If we do this, there we have the present high of this year, the 2024 year, double top with what we got in May earlier on. So a pretty strong double top. Now, double top, these two levels, but also we have a wedge within here. A wedge is 3 pushes. So the market tried to go up. Once here, failed. Tried again the second time. They tried the third time. The market fails the third time with a wedge top. You can expect a higher probability of a bear breakout, which is this crash that took place. So from a price action perspective, it really does not matter what caused it, because we would have been able to see it and say, hang on, there's a high probability that the market is going to go down. So this is not unexpected. It's unexpected if you were not trading price action, but if you're trading price action on the daily, that you can expect. So trading price action on any particular chart, you can expect that. Now, when I say higher probability, it is not 100% certainty. You would have been concerned by that doji, saying to yourself, the bears are strong, why do we have a doji? But then if you think, okay, we have a doji, if bears are strong, it's probably just a pullback, breakout, pullback, then there's the next phase of it. Now, two things out of this. If we just look at the extent of that sell-off on Friday, if you look at a measured move of it, if the bears are strong, they want to have a similar candle or maybe 2-3 candles in this week, but to get to a measured move of that height, which will take out that bull candle here and set them up for the possibility of being able to go and test the lows down here. Now, that's one probability. The other probability is to say, hang on, if this was a pullback, it actually means that some bears are already saying, okay, we had a first leg here, ended here. Those 2 candles with the first leg, pull back. Leg 1, pull back. Leg 2, they'll say, okay, hang on a second. It's time to take profits because we've had our satisfaction with the breakout, pull back, got almost to the measured move of it, so maybe a little bit more. So some cautious bears are not closing their trades if they sold anywhere in here or down here. They'll probably tighten the stop to here. They say, well, if you have a reversal, I'll get out a break even, whatever the case may be, instead of scaling in. And some are saying, okay, I can see what's taking place, leg 1, pullback, leg 2, but there's still the potential of an extension of this leg here to get down here. So I can still pull my stop down here and manage it and see if we get down here. Some bears who have not been in the market are going to say, okay, maybe I can still sell here. There is a measured move. There's a potential minor support. The major support is down here. So the market might get here and get sideways, or it might break out. So happy to take a trade, put a stop here or a wider stop there, and then manage my stop. The probabilities favor the bears, but it is just higher probability. It's never 100%. Just like when we're here, you have been thinking, okay, there's a level of support here. If I sold in here, I can put my stop here. If the bears are strong, they're going to smash through that and go for a measured move off the trading range. There's a potential measured move off the trading range, and we got to that measured move. Or you could say maybe it's just a measured move of that breakout candle, and we still got to within that. So that's the kind of thinking that's there. But then you have to manage your trades, because if it happens that the bulls are strong enough here to stop the selling off and start to accelerate up, you can't just close your eyes and walk away. You manage your profit, manage your trade, and see what happens. So that's my thought on DAX coming off the double top, present highs that we have, all-time highs on this market, this chart that we're looking at. There are magnets down here. If the bears can get past this level and have followed through, the target is down here. either the low of the bodies or the low of the candle. That's perfectly fine. That's where they want to get to first. Then they'll be satisfied, and then we can see what happens. So depends what happens this week. We'll have a good look at what's followed up in the coming week. So apply that to any of the other markets. You are looking at Brent, absolutely fascinating. So if you trade in just purely price action, you're kind of thinking, well, I'm not interested in what's driving the market, because the moment I start to factor that in, I say that because no thought crosses your mind, oh my goodness, what are the chances that oil can go down here? Who is going to allow it to happen? The moment I do that, I must stop, because I am a price action trader. I don't have the capacity to process all the other valuable information out there. But if you can, fantastic, build it in. But from purely a price action, you'd have looked and said, okay, beautiful breakout. Now let's talk. We're talking about last week. Okay, you'd have seen that breakout, and you'd have been thinking to yourself, like we started applying the thought on DAX. If the bears are strong, using just that candle, probably think, okay, if the bears are strong, they want to get to a measured move. So if I'm putting the daily chart, I'm going to take that and manage my stop. Pull my stop down because you get into level of support, pull it down above the highs of the candles. And now you just wonder, you probably break even, if it reverses, who cares? But if they're strong, they'll get to that level and maybe collapse a bit further. But there are levels of support here that can stop the market from collapsing further, or it can go sideways for a bit and then collapse. Okay, so the higher probability is for bulls to come out and start to defend these levels. There's a measured move here, hidden level of support. There is this level here, which I'll talk about just now. There is the breakout, the measured move of it. So many places where bulls are hiding to stop the market going much lower. But if you've taken your trade as a price action trader, then you manage the trade because you're working on probabilities. So far, probabilities favor the bears. If the market starts to reverse and come up, you've managed your trade, there is nothing much that you are going to lose. Now, look at that level of support. Why is that absolutely critical for a price action, or for any trader, but for price action trades? I want to put this in here and then take it out. So we had a level here. Okay. Just change color a little bit so it stays out, but I will take it off. There was a level here. You would have seen the market getting through that. But there's a strong level here, which has just gone back. I mean, this is 1, 2, 3, 4 attempts to get to lower levels failed. So at some point, the double bottom, at a wedge bottom, then a micro double bottom between here and a double, all sorts of bottoms. All that it means is that the market is heavily defending that price level. And that price level now acts out as, after this wedge bottom that we had, very strong level, with a wedge bottom in here way back in 2020. Remember that whole collapse that happened way back in March 2020, that whole big disaster that we had. And we got up here and broke out above those levels. Then we had wedge pullback, 1, 2, 3, broke out above that, higher low. Then we came back to try and break beneath into these levels, and 4 or 5 times, 2, 4, 5 times the market failed. That is a key level that the market has defended. Now we're talking about this level. We got to these levels here where the bears had created a high low double bottom. The bulls had forced a high low double bottom here, and then higher lows here. But what's happened in this week is that we smashed through that level and we came to test that level. So we are testing that level, key level. Okay, price action is broken beneath that level. So we're right at the level. If the bears break through beneath that, they have hope that they might have enough strength to smash through and keep going down. So you can expect that the bulls will come back in force to defend that level. So if already you are in a trade on the daily, you should be managing your stops quite effectively. On the 5-minute chart that I trade, there's a beautiful collapse in the US session that I managed to take advantage of. Friday difficult. My time, US session is starting about 3:30 presently, which is in the afternoon, and I only get up to like 6 p.m. on Friday. So, but it was a fantastic run. Enjoyed it. So my thoughts on Brent: expect the bulls to come out. If you're in shorts, you want to just manage your trade. You're not going to execute. I wouldn't jump into any trade of these tails and this level of support. If the bears successfully get beneath it, then I can look to maybe get in a little bit, or wait for a pullback and wait to see what we get. We spoke about that level. We might just go into a trading range, or we might end up with a double bottom like we have here, and we can pick it up hopefully as next week unfolds. Silver, beautiful market to look at. If you're looking at commodities, I put silver here. I didn't put gold because I want to use silver. You know, there's some level of correlation, but I think silver is absolutely a beautiful market to look at. Trading price action of the 5 minutes, or you know, even on your dailies. Key levels to watch out for is this low that we have in August. So the extremes of August, we're right in the middle of that August trading range. So we're right in the middle of the trading range of August. So the extremes are key. You know, if the bears are strong here, they're going to just break beneath this. And you've got to ask yourself a question. Why did we pause right here? Why didn't we have decent enough candle just to close, you know, beneath these lows and give the bears a chance to get to this low and then see how far they go? But we're in the middle of a trading range, so expect more trading range price action. Market could reverse quickly and go up to test this level, or we might just end up in a trading range. So as far as trading this market is concerned, because you're in the middle of a trading range, either do nothing and wait for clear breakout. But if you really want to trade, you're a range trader, so you're okay with you know, 0.5 to 1, 1 to 1, whatever the case may be. You could sell beneath here, but your stop is going to go above the here, not here. And you don't put a stop in the middle of the trading range, you're going to get hit. Put your stop here, and you just get your 0.5 out, whatever the case may be. Get a bull reversal. If you want to buy, you buy, but you put your stop down here. So that's probably trading range behavior. We'll see how that goes. Finally, euro versus the yen. Some say euro versus yen is like euro versus dollar, or you know, the yen. I don't pay much attention to that. A chart is a chart. What's interesting is this price action. Right from this high, big sell-off, leg 1, pullback, leg 2. So we've got into the leg 2. So that was the first leg, all of that. There is a pullback, and we got into. So we are in the range of the bears who created the sell-off, you know, deciding what to do. They've managed to stop the bulls from going back all the way up. So we have a lower high double bottom, which is absolutely fantastic for the bears. We have follow-through candles. So some bears will be saying, hang on a second, they probably would have shorted there, put their stop up here. Some bears will be saying, okay, that's going to be the first leg. We wanted more, but that's all we got. So first leg, second leg, there may be just a little bit more to go there. They may want to put add on to their trades, and then just manage to stop, or wait to see what happens down here. So if you're already in a trade, be managing your trades. If you're not, it's a bottom of it's a double bottom, potential double bottom. Okay, we're testing that low. If the bulls come in with a double bottom, who knows how far we go. If the bears are strong, we accelerate down. Again, if you want to get into a trade here, you got to use a wide stop. If you're already in a trade, tighten your stop to above here and wait to see what happens. All right, guys, I hope you found that useful. I'm going to keep, you know, with these markets because there's plenty we can look at, and let's see how this develops, and hopefully you can use the information to pick up a lot more opportunities. For me, as a 5-minute trader, whenever I see, okay, there I can see that as a potential problem, so I'm a little bit cautious. I see that as a 5-minute. I always mark the highs and the lows of each day. So I'll have the high of the low of the high of the day and low of the day marked on my charts. And I'll have the high and the low. I've got all these support levels marked as well. I don't have this, so I can take that off. I'll have there instead the high of the day. And finally, I'll have the high and the low. So of all the markets that I'll be looking at, the one that I will be thinking higher probably to go short is DAX 30. Okay, because I don't see anything in here that could potentially reverse the market. It's possible the market can reverse any time, but in terms of higher probabilities, at the back of my mind, I'm just going to have a look out on DAX and the indexes, because if we break out beneath the low of Friday and just get to here, even if we reverse, I mean, that's a beautiful enough move. Of course, does it happen in the Asian session when I'm sleeping? Does it happen in the European session when I'm there? Does it happen in the late US markets when I'm gone? Who knows? But that's what I'll be looking out for. So in terms of higher probabilities of the 5 minutes, that's what I'll be looking about. Having said that, when you trade the 5 minute charts, when you open your charts with your high of yesterday, low of yesterday, that's it. You trade what you see unfolding in front of you. Don't wait to see what's going to take place because you're trading intraday. All right, guys, thank you very much. I think I mentioned my name, probably didn't. Name is George, George Nyabaza. Thank you, Trading Buddies. Thank you, Jeff. Thank you, Ash. We shall see you guys again next week. Take care and bye-bye.
Okay, Ash is asleep. I think let me get rid of all of that and go with just a little bit of a hint as to what I'll be looking for a little bit later if I'm in front of the charts, and that will be the euro versus the dollar on a 30-minute chart. And the reason is this: we have a very, very strong on a 30-minute chart support and resistance level. Currently, it has failed as support, and perhaps it will be resistance. If it's not resistance, however, and price gets back above that level and we get a bit of a pullback, I'd be looking to trade this up to the daily pivot. So untested daily pivot, always attractive for me with euro dollar, and that's what I'll be looking to do. So I could play a false break of this trade line, but I'd need to get my entry above that area there because that's the line in the CNT for euro dollar today. But, you know, looking for something like this, price back up here, come back and retest either that or that, both would be good. Then I can get my entry here. Might want to take a bit of profit here, but your target's going to be the daily pivot. You might get a little bit more out of it, but I think that's the play for me on euro dollar for the day. I have also got 2 orders in the weekly charts. Now these will be open all week until triggered or not, profit or not. We will, in the Telegram group for my mob, that will be managed in that particular fashion. Long way from entry at the moment, of course, which is down here. If you want to follow it, 2.0994 is the entry. There is a stop loss at 2.1299, and there is a first take profit at 2.0700. And what may be a little bit of a hedge on that, not necessarily the case. I'm buying pound versus dollar at 1.3269 with a stop loss at 1.3095, and my first take profit will be at 1.3500. So pound dollar long, pound Kiwi short, euro dollar long if that sets up on the 30-minute chart, and only for the 30-minute chart. And there's your target, the daily pivot, which is currently untested. Looking for a false break of this horizontal level or the trade line. I think that'll be a nice setup if it does get there. That is me for the week, the day, and I'm off to bed very shortly so I can get this cold out of my system. Or
Sorry,
maybe
mate,
I should have a rumish. What do you think?
my Zoom crashed. I am back, but I guess the guys hopefully know what I'm looking at. Basically, euro pound short, but it's got a set up as I suggested earlier.
Yeah, cool. Sounds good to me, mate. Great to see you. Good to be back on deck, and albeit not feeling the best.
No.
Lewis, I've got to say, you look much younger in your photo. How's that? But it's great to have you with us, of course, as always. And those of you who have joined us, Gary, good to see you in the room, of course. Teen, Lokin, it's always nice to see your faces as well. If not your faces, your names anyway. Thanks for being our trading buddies for the day, and we will be with you once again next week. Have a good week, mate, and everyone. Bye-bye for now. See ya.